Ira Epstein of Linn and Associates with your SPDR ETF wrap-up for this Monday, the 14th of December, 2020. This is a big week, folks. We have 16 central banks giving us their monetary policy decisions. Our own bank starts meeting tomorrow on a two-day meeting. It comes out Wednesday. The line in the sand on the bank, and I'm telling you what the analysts seem to think, is the line is, does the Fed tweak or not tweak its current existing program? No one's looking for the Fed that I see to lower interest rates. The question is, do they do any tweaking to the $80 billion of securities they buy each month, and then the $40 billion in mortgage securities? So you've got your notes and bonds in one hand and the others there. Do they change the focus? Do they go longer term out to try to control interest rates different? That's what the market's focused on. So we wait and we have to see what they do. As for other central banks, it could be anything. COVID is out of control in Europe. If you're watching it, Germany shuts down Wednesday. Today they went to Tier 3 in London, which means restaurants, everything's basically closed now. Grocery stores will be open, and you'll have pharmacies open. Other parts, they'll tell kids to stay home most of the time. New York City's thinking of going into a further shutdown right now. They're running out of beds. And if it's bad in Europe now, what do you think we get in 2 weeks? Because that's about the time lag that we've been getting. They're already telling in Germany, don't go away for New Year's Eve, forget Christmas with anybody, and closing down all the retail shops there until, I think it's January 10th or something. Means the Christmas season for those shops are done. Imagine how bad they're going to do. I mean, retail's just getting smashed on this. Thank God for internet shopping, but what if you have a brick and mortar store and you're a boutique store? President William, not President, boy, that was maybe something I know there. Attorney General William Barr resigned. President accepted the resignation. We have a two-part COVID-19 relief bill that has been presented by the bipartisan committee to both chambers of Congress. We'll see if they do anything with it. Simply put, it's now one bill's about a $760 billion bill instead of $908 billion, and that will cover everything but state and city aid and legal relief. Put back in, they made a second part bill for $160 billion with those parts in it. Will Congress do anything with it? Your guess is as good as anyone else's. So let's go to the chart action. New chart, XBI. This is your biotech ETF, a strong one. And you can see when I say strong, how this market has been acting. Obviously, as we started hearing relief about COVID vaccines, and they were coming and coming and coming, here you go. So this is a chart that's really represented it. The pattern has been bullish, higher lows, higher highs. Remember, this is the swing line, and it's got that clear-cut pattern. Then you had an acceleration pattern. What do I mean by that? Outside day down. What happens if you take out the high of an outside day, according to my theory? My theory is you now have caught a group short, and the market will move to another number often. If there's a moving average above the market, one of the main ones there, or a Bollinger Band. So the market does its thing and takes off, right? Let's look at the moving averages. They're all under the market. The 18, the 100, the 200-day moving average of closes. Where's the Bollinger Band? Right here. So what the market did is on this down day, when it got back under the Bollinger Band, it hit it at the top of it. I don't know where it's going. It's already at the Bollinger Band, and the market accelerated. It probably is going to pull back into this band. This could have been not a blow off. I don't know how to explain it other than you get ahead of yourself. But what have we done every day? We're just running that Bollinger Band, which is very bullish, and we have an embedded reading. Embedded reading, for you uninitiated, occurs when the slow stochastic study just goes sideways over 80 with both numbers that make it up, called a K and a D line. The difference between the two numbers, one uses 3 days worth of the same data, the other uses 5 days. So the 3-day, the red line's going to whip around the blue, but as long as they're both going sideways over 80, I call them locked in. I think a better word is embedded. When you lose an embedded reading, this is great to see it just this way. This is where the market, right here, it's still embedded. You lose it. If you don't get it back immediately when you reopen the markets, and when I say immediately, not the first 10 seconds, but certainly within the first hour. If you don't get it back and it doesn't act like it's going to get it back, I think it's time to scoop. The market often goes back to the 18-day average of closes. And we'll see if it can get down there. It just missed it here by 40 cents. We'll see if it gets down there or not. Often it does that. The industrial sector, Spider, turned bearish today. First time in a while that's happened. You looked like this on Friday. You had a higher high and a lower low. Certainly no trend. But you got up today early and then lost all that, and that gives you lower highs, lower lows, putting in the play potential of getting to the lower Bollinger Band of 86.76 with the slow stochastic down, the bias down, the trend down. What would negate this? Taking out the high of an outside day down, today's high at 89.69. Barring that, I'm looking for that lower Bollinger Band. Energy sector did the same thing. So even though the futures are strong, this energy gave that up, lost its bullish embedded reading. I'm looking for this 38.77 unless today's high is taken out. Take that out, then I got to rethink my game plan. Don't take that out, and I feel pretty good that you're going to get back down there. But then what to do? Is the bias down? No. This is a contra trend move, the end of an up leg, and that's what it signaled. It is not a trend down. QQQ. No trend at all. You got a higher high, lower low. Now the bias has stayed up as you've stayed over the 18-day average for a very long period of time. The market lost its embedded reading right here, went to the 18-day average right as it did it, which is unusual in the same day, stayed there for the next day and just sort of playing around right now. The emerging markets, you lost your embedded reading. Yay, I've been wanting to play this market for the longest time on better terms. And this is the first correction that's coming in. Saying that, I don't know that it's a sell signal. You have a higher high and a lower low. I just think you're going to that 18-day average, and you're pretty darn close. You're about a dime away from it. And at that point, let's see it rebuild and what it's going to do. Nothing grows to the sky, remember that. Gold is still bearish. Lower highs, lower lows. Now, I did a piece today for Bloomberg, their TikTok, their oral commentary. I'll do another one tomorrow. And today they asked me to talk about the relationship of the 10-year note and gold, which I did. And traditionally, there's an inverse relationship. Traditionally, as interest rates drop, now let's think the 10-year went to like 0.5 this year or something, gold goes to an all-time high. Gold went over $2,000 an ounce. The relationship is still at work. Now the question is, if the economies of the world soon pick up, the word is soon, and interest rates start climbing, does that put a cap on gold, or does the Fed let inflation run hot without letting the longer-term 10-year note do anything? Interesting game that we're going to have. Gold miners still bearish. Lower highs, lower lows. Target, 33.53. End of the downs, if you take out 36.03. In the TLT, you've gone up to neutral, which is the 18-day average of closes. While the trend is up, the bias is down. Why would you want to go into these markets like that in front of the Fed meeting? I guess people do. They think they'll catch something, but remember, even if you knew what the Fed was going to do, you don't know the market reaction to it. Then you get to the euro, which still has the embedded reading to the upside. Higher lows, higher highs, still bullish until this is lost. So in the mornings, and I wish I looked as good as she does, but in the mornings, I want you to bounce your trade ideas off me. And what do I mean? In the morning, I put out a futures video where you can do that. And in the afternoon, at about, I want to say 4 o'clock, I'm recording my Spider ETF video telling you what I'm seeing for the next day, and then I tie it together with my futures video. We have what's called a combo package if you want to get both the futures and that. Why do I say the futures with it? Well, honestly, what do you think all these indices are made out of? They're made out of futures contracts. That's what they're looking at. What do you think this interest rate's looking at? What do you think the energy markets? Now, you can get within the market, certainly, and say the oil service sector is not oil. I agree with you. But when you go directly to USO and OIH, you get to the others, you're pretty well there. Currencies, these are exactly related to the futures markets. They count on it. That's what they're trading off of. GLD, SLV, they are trading off the futures markets. So when you put them together, you get something. It's not going to impact most of these spiders, the others as we call it. So there's a number there that don't do it, but the two are very powerful together. And what I do is I put out a daily video for that, and then I also put out a weekend video. So on the weekend, I only do long-term charts, weekly charts. I cover everything you just saw plus more, like I was covering PAVE last week, P-A-V-E. Now I've just added a different market to it, and we'll rotate all the time as to what's the hot markets and where they're going. To try this, $8.95 for 30 days, but I do have a special. For $159 for a yearly subscription, I have Cyber Week special. You get my full charting course, $199.95 value thrown in. That's going to end this week, so it doesn't go beyond this week. It's going to be over, and I'll come here and I'll tell you it's now over. It's coming sooner rather than later, this week. So I'd be very, very cautious. It won't go through the weekend. Do we understand that? All right. So here you are. How do you find out more? Just go to our website under the word research. Any one-year subscription you buy, I will give you the course. You can give it away as a gift. We don't start the course till you tell us, begin the course. I then turn on the charting software, which is an $80 a month value. It will have the exact data that I use in the videos. And then in the mornings or afternoons, depending what you're doing, you come in and you see what I'm saying in this video or the morning futures video, and away you go. A lot of people don't trade futures. That's why I picked this up. And this video has exploded for us in amount of subscribers. I'm Ira Epstein. You have a great weekend. Well, actually a great night. I'm already talking weekend. I will see you tomorrow. I don't know why I thought it was a weekend. Take care now.